Looking forward to sharing with people, which I think is kind of the biggest difference maker as it relates to your trading. So, today you heard from a lot of different speakers, a lot of different strategies, and I think you get the importance of trading psychology. And you also got some of the strategies today on how to use that in your own trading. But I kind of want to do sort of like a wake up call moment here, right? Almost like a reality check. So, today we're going to talk about how to master the trader within, and one of the things that I think is the biggest difference maker between those who make it in trading versus those that don't. It's all between over here, right? It's all in our mindset. So I want to jump into that today. But I also want to say the goal here for you today is not to learn anything, right? I know that might sound weird. It's like, wait, we're here to learn. Well, yeah, but the goal is not to learn anything. We're going to talk more about why I say that is. But let's dive in. So again, I'm not going to bore you a little bit with my story, but obviously I've been trading for about 15 years, started in 2010. And since then I've traded for a few prop firms and became a successful trader in my early 20s. I was 18 years old when I got into the markets, and I was in my early 20s when I was trading for a prop firm. And now I've been doing that ever since. I've coached thousands of traders now at this point, and some of whom who run their hedge funds, and I kind of help with their psychology aspect. So if you've watched that TV show Billions, you remember there's a woman in there called Wendy Rhodes. She's like the psychologist for a lot of the hedge fund managers. So that's a lot of the work that I do, because one of the things I realized when I got into trading was that trading was the biggest personal development journey I've ever embarked on. Like, I've learned so much about myself being a trader than in anything else, right? Because you learn everything. You learn how to handle your emotions, those fear, those greeds, those moments of doubts. How do you control yourself? And I would kind of implore you to think about how you do something is how you do everything. So if there's an issue with your trading psychology, it's not just trading psychology that you're having those issues. And I want you to consider that there's other areas of your life where you have those same issues lingering in. Because it's very easy. If I see a trader and I ask them to show me like their trading desk, right? Let me see your trading desk. And it's all like a mess. It's cluttered. There's documents everywhere. There's stuff all over their desk. Then I know that your mind isn't clear, and your trading probably looks the same way. It's chaotic. It's a lot of this. One day you're trying this strategy. The next day you're trying the other strategy. So it's going to be a lot of back and forth. So how you do something is how you do everything, right? So I want you to consider that if you have trading psychology related issues, which again, a lot of traders do, it always has to do with another area of your life where you also have a loss of integrity. And we're going to dive into a whole lot of that today. So obviously, I don't want to sugarcoat anything, right? Trading is a very challenging business. And the main reason why people struggle to succeed in this business is because this business, unlike any other business, requires extreme self-discipline and objectivity, which simply isn't present anywhere else, right? In any other business, any other job, it's not as, it's easy to control yourself because you know what you're going to buy the product for, what you're going to sell it for. You kind of know all those things beforehand. With trading, though, it's a little bit different game. But the biggest reason is, think about it. You growing up as a child, right? Your parents are telling you what to do, right? And then you go to school. Your teachers are telling you what to do. Then you go to college. Your professors are telling you what to do. And then you go get a job. Guess what happens? Your boss is telling you what to do. Your manager is telling you what to do. A supervisor is telling you what to do. There's always somebody telling us what to do. When trading, though, nobody's going to tell you what to do, right? You are your own boss. And that is obviously a great thing, but that is also the biggest reason why people fail in this business, right? Is because nobody's going to tell them what to do, right? You have to tell yourself what to do, and you have to keep yourself accountable. So that self accountability is one of the main reasons people don't have that structure. So I think give a lot of my success to my early days trading in a prop firm, because as you know, if you're in a prop firm, guess what happens, right? There's morning reviews every day. There's evening reviews every day, right? And the firm gives you loss limits. Hey, if you lose this amount of money, you're done. You can't trade anymore. Literally, like if you hit your loss limit, your platform will lock. You cannot trade anymore, right? Same way you had weekly loss limits, monthly loss limits. So there was structures in place to keep us away from blowing up an account or messing up. So why is it that retail traders fail, or they have a hard time following through on that, or they have a hard time managing their risk? And you hear stories all the way. I mean, Reddit is a graveyard for hopes and dreams, right? You go there, you see people losing all sorts of money. Why is that? No accountability, nobody watching over their shoulder, nobody's going to tell them when to get out. Like, if you listen or rely on people online for trading tips, guess what? Everybody's going to tell you when to buy a stock, but nobody will tell you when to get out. Nobody tells you when to sell it. And the money's only made when you sell it. Likewise, the losers too, you have to sell the losers. You have to make it a small loss. But a lot of people keep holding on, right? They hope it comes back up. Yeah, they hope it comes back up. Let me buy more. Maybe it'll come back up. But if you trade on hope, then your results are just going to be merely that. It's just going to be hope. And hope is not a strategy, right? If you trade on maybes, like maybe this stock is going to come back up, well, your results and your financial future is also just going to be a maybe. And we don't want to do that. So whether you work for somebody else or in your business, you're constantly being overseen by your manager, your boss, your clients, and these people constantly critique it. Now, here's another opposite side of that. If a boss in your job tells you what to do and you don't do it, what happens? Right? What happens? Well, there's consequences. You could lose your job. You could get fired. There's a lot of different consequences, but in trading, how easy is it for us to make a mistake, make a stupid mistake, lose some money, and just close your laptop? Nobody will ever find out, right? Nobody's ever going to find out. And nobody's going to ask you about that too. And you go home, your wife asks you, how was your trading day, honey? You're like, yeah, it was okay. It was all right. And you don't tell them all the stupid things you did. It's very easy to hide it in trading, right? Your ability to succeed in trading is directly proportional to how honest you can be, not only with others, but also with yourself. Like, are you really making progress, or are you just kidding yourself? It's really, really important to, distinguish that. So you have consequences, right? In a job. In trading, there's the consequences, us basically losing our money. The consequences, just us blowing our account. The consequences are all our hopes and dreams, like going down the gutter. So the way to do that is to take ownership, number one, right? There's no HFT out there looking at your results and trying to shake you out. There's no algorithms causing you to stop out. You have to take complete ownership, okay? HFTs are not around to grab your 100 shares. Like, trust me on that. They're doing millions and billions of shares every day. They don't care about your 100 shares. So nobody's after you, right? You are after yourself because you are not following through on your rules, right? So the biggest thing is, make sure you have a plan in trading. That is the absolute basic criteria. Just like you would never enter a business without a business plan, why do you think you can come into the most competitive marketplace out there, which is trading, right? And it is competitive, right? You are competing against me. I'm competing against somebody else. We're all competing against, traders from Goldman Sachs, successful prop firms, algorithms, HFT. We're all competing with that. So how do you expect, without a plan, coming to this marketplace and hoping that you're going to dominate and you're going to become the successful trader? It's a pipe dream. It's never going to work that way. You need to have a plan if you're going to be competitive and playing with the big boys, right? So, think about it this way. What happens in a lawless society, right? Again, I'm not going to go into any political tangent, but think about it. What happens in a society when there's no rules or where there's no laws? What happens? Chaos, right? Chaos is what happens. And we're seeing that in different parts of the world. So think about it. If you don't have a strategy or a plan, what happens in your trading? If you don't have any rules, you don't have any laws governing how you're going to trade, what happens? Chaos. And your results are going to be chaotic. If you look at your results in an equity curve and you plot out what your account balance looks like on a day-to-day basis, you will see that chaos in your equity curve. It's going to be a lot of back and forth, right? And it's very easy for most traders to get a string of good wins, right? They get a string of good wins. They're building the account. And then, one bad trade, they give up all of. I'm sure, and a lot of people can relate to that. At least, I absolutely can. Early in my trading career, I was the same way. Slowly winning, stacking up those small winners, and then just one big loss wipes away the whole last month of profits. What a waste of time, right? Proper money management would have avoided that. Proper risk management would have avoided that. So not having chaos is absolutely key to your trading. There's nobody going to be looking over your shoulder. You have to control yourself. And that's why I said how you do something is how you do everything. And a lot of that goes back into one of the things I talk about in my book, Prepping for Success, is integrity, right? Being a person of integrity. Do what you said you're going to do and do it when you said you're going to do it. But then when we try to do that, what happens? There's only two primary emotions that move the stock market: fear and greed. That's it. There's only two other things. There's no other thing that affects in the market. The only two primary emotions, fear and greed, is what moves the market. Now, your ability to handle that is what's going to determine your success, right? So here's another thing. So research has already been done. Trading releases the same hormones of dopamine and serotonin that you get when you're having sex, when you're gambling, when you're doing any illicit drugs like cocaine. Like research shows that traders get the same hormonal, dopamine spikes on a day-to-day basis. Now, those people who gamble or do any of that stuff, well, they're only going to get it in that moment. But if you're trading every single day, you have to learn how to control those spikes so they're not affecting your decision making. You cannot be emotional when it comes to trading. You have to almost be robotic. And that's what I call robotic indifference. Your only loyalty in trading is to stick through and follow your trading plan. That's it. There's no other loyalty you have to nobody else. It's just to your own trading plan. So you won't know exactly how you're going to react to something until you're faced with it. You don't know. You can prepare for it, but until you're faced with it, you don't realize it. Now, I don't know about you guys, but has anybody here had that happen to them where you did something stupid in the market, you lost a lot of money, you lost more than you should, and it just feels like somebody just punched you in the stomach. You feel like throwing up because like all the mistakes you made, you shouldn't have done it. We all do that, right? We all do that. But if you can just control that, you're going to get the result. So don't focus on this end result of all this money you want to make, because money is simply a byproduct of you sticking to and following your rules. If you do the right things over and over, the right actions over and over, if you follow the process over and over, right, you're going to get to that outcome. You're going to get to that result. But what a lot of people try to do is to try to get rich quick. I don't want you to get rich quick, right? I want you to get rich for sure. And that takes time, just like anything else, right? If I start learning, like here's my golf clubs, right? My golf clubs are right over here. So let's say I was brand new to learning golf last year, had a lot of time. I was like, you know what? I'm going to learn how to play golf. Do you think I was just great on my first day? Right? I mean, I remember that. I couldn't even barely hit the ball. I could have barely hit the ball. Ball is just literally sitting right there. It's not even moving. It's just sitting right there and I couldn't hit it. Right? But do you think if I play golf every day for a year or two, do you think I'm going to get better? Right. I'm going to get better, right? But I'm still not going to be able to compete with the PGA Tour. So it's all a matter of time. How much time do you put into something? Do you think Michael Jordan just came out of his mother's womb being a successful basketball player? No. That's something he had to practice. That was a process, right? Every single day when nobody's looking, he would just go in there, shoot all night. And then you know what another thing he would do? He would take the opponents, he would take their game footage and he would break it down and he would watch and observe. And that's what traders need to do. So a lot of my traders, I tell them, record yourself when you're trading. That is the biggest mirror you can get. Record yourself with a camera, not just your screen, but also record yourself, right? Because that way you can observe your emotional reactions, right? Your face, you'll see yourself. This is what you'll find. Whenever you're breaking your trading plan, this is what you're going to find. You're going to you're tied up, you're closed bodied, right? You're really focused. You're leaning forward on your chair, right? And those psychologically impact you, that little posture. Like just try it. Try it right now. Try really closed, really tight. See how you feel versus when you're like leaned back and you're relaxed. So your physiology affects your psychology. So I always tell people, if you catch yourself like leaning forward and like really getting absorbed on the screen, lean back and watch how naturally calm you become. So again, you're not going to know anything until you're faced with those issues. So some of you guys, maybe you face psychological issues, you made mistakes. I think we all have, and I think it's honest to admit that at some point in our career, we're all going to fall prey to our own emotions. But once you learn how to control it, it's going to be the best thing ever, right? Being completely robotic and unemotional has been the best thing for my trading. Now, it doesn't help in relationships, right? But in trading, it's the best thing ever to be completely detached and unemotional. Okay, so you have to overcome your bad habits. And with integrity, if you find yourself saying to yourself, you know what, I should have held it to my target. And again, just notice as I'm saying this, notice how many times you've said that to yourself. Man, the stock went up exactly where I thought it was going to go. Why did I get out too soon? Just notice. Have you ever said that to yourself? I keep getting out too soon. I knew I should have held it. I should have exited that. I should have taken the loss. Shoulda, woulda, coulda, right? There's more dreams broken by shoulda, woulda, coulda. But here's another thing I would say. Those things are never going to go away, ever. No matter how psychologically strong you become as a trader, those shoulda, woulda, coulda will always stay. I know people, hedge fund managers, they've been in this 30, 40 years. They all say the same thing. I should have held Tesla. I should have done this. Shoulda, woulda, coulda is never going to go away. That's just part of being a trader, right? Even today, I was like, I should have held that trade. That happens. But the key is as long as you follow your trading plan, those shoulda, woulda, couldas are meaningless, right? If you set a target, you get into a trade, you said, okay, I'm in it at $23. My target is 24.50. And if it hits 24.50 and you get out, there's no shoulda, woulda, coulda. Sure, it could go to $30. Who cares? You hit your target, right? The target that you had planned for, you hit it. That's it. Move on to the next trade. And likely, same thing with the loser. If you said if it's going to go below 22.50, I'm going to walk out. I'm going to take up my 50-cent loss on the trade and I'm going to walk away. That's it. Doesn't matter if the trade comes back down and goes back up and works anyway. You followed your plan. So I only judge myself and my traders not based on the result or the P&L, because we know the results are direct proportion to your ability to follow your trading plan. That's pretty much it. So if you just do that, long term, you're going to get that result. So the mindset that I want you to have is like a casino, right? You go to a casino. Somebody can go to a casino right now and mill $1 million. They can win $1 million in the casino. Do you think the casino is going to mind or going to cry about it? No. They're going to be like, you know what? Here's some free drinks. Here's a free stay. Keep playing, right? Why? Because they know in the long enough time frame, the casino is going to come out ahead. The more you keep playing, eventually they're going to win. Now, how do they know that? Well, they measured it. They know that they have this little 0.78% edge that in a long enough time frame, that edge is going to play out. So we're going to talk a lot more about that today. I see some questions coming in. If you're speaking about robotic trading, is there a chance that robots will replace humans in trading one time? I don't think that's ever going to happen. And again, I've been in this 15 years. I've seen people come and go. They've been testing robots and softwares and black boxes and gray boxes. But the fact of the matter is, markets only move on fear and greed. And it's also, in a way, a self-fulfilling prophecy. So when those robots come in, and let's say the robot works, and everybody starts using it, guess what happens? It stops working because everybody's using it. And then you get a new robot. So there's no substitute, in my opinion, for the human eye, right? Sure, there's quants, there's a lot of different things hedge funds have access to that can help them do that. But they're basically doing the exact same thing. They've put up their criteria into a set of rules, right? If-then statements on a software, and the software is simply just doing that for them. Now, the advantage we have as individual traders, unless you're risking billions of dollars, go for it. But if you're not there yet, you don't need all of that. You can do it yourself manually. And I don't think there's any substitute for the human eye, because here's what softwares rely on. Softwares can only go by the rules, if-then statements. But as humans, if you've been in the market for like 5, 10, 15 years, you develop also a sense of feel. Right now, again, I tell people don't rely on feel. It should still be back tested, but you get a sense of feel of what is a good entry, what is not a good entry. And that element of feel is not something you can program into robots. And I've seen people try to build their robots that spend years trying to do it. And I'm like, well, you've been trying to build this thing for 5 years. You could have just traded for 5 years and made more money. So that's definitely one of the things. How does trading is similar to business or different? So trading is basically as simple as basically very similar to entrepreneurship, because it is, right? In entrepreneurship, you're starting something from nothing with just an idea. That's what trading really is. Trading is just an entrepreneurial venture. So if you treat it like a business, now the problem is what I see online on Reddit or Twitter or all these other things is people treat it like a hobby. Ooh, I got this meme coin. I got this GameStop. Oh, this one's going to shoot up. That's all gamble. That's all speculation, right? And your results are going to be hit or miss. Like you, like me, probably know people who made some quick money, either on crypto or something, but you never hear from them again. What happened? Because the quicker you make money, the quicker you give it away. So don't focus on home runs, just singles and doubles, singles and doubles. And slowly what's going to happen is your account's going to be here, point A. If you keep hitting singles and doubles, your account's eventually going to go up like this from point A to point B, like a nice line. But if you're going to have it up and down, that's how you're going to feel emotionally too, right? Because we are not immune. No matter how much I can try to be robotic, there's still emotion, right? I can't completely get rid of that. I'm human, right? So if I trade like this, where my account's always up and down, how am I going to feel? I'm going to feel the same way. But if my account is like nicely going up, little ups and downs, but eventually it's headed in a straight line, I'm going to emotionally feel more comfortable with that approach. So my approach is not about getting rich quick or hitting these big runs or that people you talk about online. I'm just singles and doubles and building my account because I know long term that's what's going to outperform, right? You might know Kathy Wood, right? She runs ARK Invest ETF. Look at her chart, completely straight up till 2020, right? And Warren Buffett was super slow, like just going up like this, slowly, slowly, slowly. And there was a point in 2019, 2020, Kathy Wood was over here, hundreds of percentage points up. And she made a post about Warren Buffett. Hey, Warren Buffett's slow, making money very slowly. And here's what our ETF has done. Now look at it. The quicker it came up, the faster it came down. And now Warren Buffett's still going up. And now he's ahead of her. Right? So slowly and steady always wins the race. We all learned that in our childhood fable of the tortoise and the hare. And I personally live by that. Because what happens when you start running fast, you're going to need to rest. You're going to slow down. But if you keep going one step at a time, you're eventually going to come out ahead. So we're going to talk a lot more about that. But, for most traders, if you cannot be honest with yourself, if you cannot be objective, that's where you're failing, right? And for most traders, it's over even before it starts. Because here's the fact. In order to make money, you need to trade. In order to trade, you need to have the money, right? In order to win something, you need to bet. In order to bet, you need to have chips to bet with. But if you don't have any chips left, you can't bet. And that's what a trading account's like. In order to make money, you got to be in it to win it. You got to trade. To trade, you got to have the money. But if you run out of money, you can't trade. So for most people, it often they learn when things get really challenging, right? So I just don't want you to be a victim. Don't put your results on somebody else. Oh, the market did this. Oh, the China war happened. The trade war is happening. There's always something you can find to blame it on, but that doesn't change anything. Who pushed the button? Who pressed the buy button? You did. Who didn't get out? You did. Who should the blame go on? To yourself, right? So treat it like a business. I see a lot of people, again, by the way, we're only on slide number 1. I mean, that's me. I'm so passionate about this subject because I wouldn't be here without it, right? Again, I wasn't born like a successful trader, right? I was born in India. I wasn't very good at math, contrary to the stereotypes. I was horrible at math in school. The last thing I ever thought I would be doing is something to do with numbers. But I'm only here because of the product of psychology, right? I realized the importance of that. And once you can master it, you can do anything, right? I started off as a day trader. Then I became a swing trader, right? Then I started doing currencies. Then I do options. Now I do everything. I do a little bit of everything. Why do I do that? Because I know I can now. I've mastered the basic elements of the psychology. So don't be a victim. Take ownership of everything in your trading, okay? So let's just do a quick little exercise here because I've been talking a lot. I want to do a very short, quick exercise. Okay, I'm going to show you a series of charts over here on the next 10 pages. And I just want you to either type it in the chat or, rate it in your head. Just on a scale of 1 to 10, I just want you to rate those technical setups and let's just see how you do, okay? So chart number 1. So take a look at this chart of Philip Morris stock, okay? So where you see the arrow, let's say we're going to be entering short there. It's called a breakdown pattern. So let's say we're entering over here and we place our stop loss over here. Would you say this is a good breakdown to short? Like, what would you give it on a scale of 1 to 10? What would you rate this thing? If we're entering short over here, our stop loss goes over here, and we're expecting this thing to go down. What would you give it? Right? Take a little second here. And then on the next slide, I'm going to show you how it would have played out. Let's take a look. Boom. Look at that trade. So we entered here. We placed our stop loss. This is a classic breakdown pattern. And look at the stock. Nicely trending down. The short idea would have worked out perfectly and would have made you the money, right? Now, let's take a look at another slide, okay? Now, we see the stock, Walmart, it's nicely uptrending. It's going up. We get a beautiful pullback to the moving averages, right? Nice controlled pullback. And then we start getting these bottoming tails over here. So imagine we're getting in over here, and our stop loss is going to be down under that tail where you see the other arrow. Now, if you're buying here, what would you give that setup? Now, the assumption is everything else is good. The higher time frames are good. The monthly charts, daily charts, they're all good. And now we see this on a 5-minute chart on a nice uptrending stock. What would you do? Would you take that trade? Would you not take that trade? What would you rate it on a scale of 1 to 10? All right. And on the next slide, we'll see how this played out. Look at that. Nice pullback to the moving average. We got in. We put our stop loss. Nicely, stock moved up. Beautiful trade. Now, let's take a look at another example, right? So we see here Ralph Lauren, RL. Notice this line. It keeps failing to get above this little line over here, right? Where you see my arrow, failing to get above that line. But then finally, let's say if it breaks out above all of this resistance and we enter along, we place our stop loss under this candle. What would you say that setup is like? Is it a good one? Let's take a look. Oh, look at that. Perfect breakout above a whole number of 142, right? We got a nice breakout. The trade worked perfectly. Here's another one. This is something we call and teach known as a 3-bar play. And you can find a video on that on our YouTube channel. We see a stock opened up, nice big green candle, couple bars of consolidation. Now let's say we enter above this whole number of 38. We place our stop loss under this whole number of 37, right? That was a pretty good trade. Look at that. Worked out perfectly. Now, what would you give this on a scale of 1 to 10? Here's another example. The opposite of what we covered in the first slide. Stock is moving on up, starts to go sideways right under a whole number of 64. So we enter above that breakout base, place our stop loss under here. Look at how the trade worked out, right? Worked out perfectly. So, and here's another one. Weak stock goes down, rallies up, 40, 50% retracement, leaves the topping tail. This is something we teach in our courses known as a sell setup. So now let's say we shorted the stock over here where you see the entry arrow and we placed our stop loss above there. Look at that trade, worked out perfectly. So my guess is when I asked you to rate all of these setups and are they good setups or bad setups or something you would take, my guess is a lot of you guys said, yeah, those were good setups. Those are really good trades. So then here's my question to you. My question is, if we are so good at reading charts, you guys all answered it probably correctly, I'm guessing, right? You all answered it correctly. You all know how to read charts. You all know how great chart analysis is. And you know everything you need to know about charts. You could spot a good trade from a bad trade, right? You absolutely could. So here's the thing. If you know all these charts, you know how to read charts, why is it that some people get the results and some don't? We all know how to read charts. Then why is it some people get the results and some don't? Maybe, just maybe, your success in trading has nothing to do with charts. Maybe, just maybe, it's your psychology that's holding you back. Because we can all see these trades, we can all spot them. But what happens in real time when the markets are open, right? When it's very easy to look at these slideshows when the markets are closed and say, oh yeah, that was a good one. But when the markets are moving and shaking, you have to be decisive enough to, when you see a trade, to number one, pull the trigger, take the trade, right? And be able to write it down to what your target is. That is basically, in a nutshell, what trading really is. Trading is not about reading charts. You all can take a 2-day seminar and you can learn how to read charts. In fact, a lot of you guys, I already showed you these charts and you can already guess that these are good trades. So you already know charts. So maybe, just maybe, it's not charts, it's the psychology. And you guys know that, right? Because you're here at a trading psychology conference. So, well, you're here. You're already ahead of 90% of the people out there that are still online trying to learn how to read charts. It's not more information you need. It's not more charts that you need. You need to master your psychology. That's the basic nutshell. Okay. So are you a fear-based trader full of self-doubt? Is your fear of loss, and I want you to answer this question to yourself, is your fear of loss stronger than your hope for gain? Because if it is, you're screwed, right? I mean, there's hope, but it's a tough one. Your hope for gain needs to be stronger than the fear of loss. Most traders' fear of loss is stronger than their hope for gain. So guess what happens when they get a winning trade? Because their fear of loss is stronger, they never hold on to their winning trades to the target. They always get out too soon. They see a little bit of a profit and they take it. That is the biggest fallacy in trading. And it's such a cliche. You hear it all online, right? You hear this cliche. You can never go broke taking profits. Well, that's exactly how most people go broke. They take these tiny little profits. But then the loser, for some reason, they have no problem holding on to those. So think about it. The winning trades we get out of it too soon, and the losing ones we keep holding, maybe it'll come back up. Let me buy more shares. Let me lower my average cost. So we keep holding on to the losers. We never hold on to the winners. How is it you're going to make money? The odds will never work in your favor that way, right? So your fear of loss needs to be lesser than your hope for gain. So now, does this fear compromise your capacity to trade profitably? It absolutely does, right? Your winners absolutely need to be bigger than your losers. And in fact, you don't even need to win more. A lot of people say, I need to have a high win rate. You don't. Win rate's meaningless. It absolutely is meaningless because you could have a 95% win rate, but the 5% of the time when you lose, if it wipes away the last 20 trades, winning trades, well, then that's not a good system, right? In fact, good systems can be done with 50-50 or even less. Even 40% win rate's good. How? Well, if you take 100 trades and your back test has shown you, hey, you're only going to have a 40% win rate. So what does that mean? What that means is out of the 100 trades, I'm only going to win on 40 of them. And I'm going to lose on 60 of them. Most people would say, well, you're going to lose. No. But what if the loser is $100 each, example, and the winner is $200 each? So now, even with a 40% win rate, guess what happens? 40 trades, make $100 each. You got your whatever, $200 each. You got $8,000. 60 losing trades, you lose like $100 each. You lose $6,000. Net, you have $2,000. That's what trading is, right? You have to learn how to be the casino in this game. You don't want to be the player in the casino, because the player is never going to come out ahead. He might get lucky once or twice, have a good time, but in a long enough time frame, if he does this for a living, he's going to lose, because the casino knows their edge, their percentage edge. So my question to you is, do you know your edge, or are you just treating it like a hobby? And that's what a lot of people do. They come into trading because they enjoy the thrill. They enjoy doing it. Oh, I'm a trader. They put up their bio on the Instagram. I'm a trader. Look at my 5 monitors, right? It sounds nice, but you're doing it as a hobby. A professional trader doesn't take chance with his money. We know our odds beforehand. And that's what comes down to creating a positive expectancy model. Positive expectancy is simply a proportion, or you can Google the formula for that, but it's basically combining your win rate and your win-loss ratio to come up with a number. And as long as that number is positive, your system makes money. But if the number is negative, you can try all you want. You're not going to make money. So then what are our options then? If we cannot conquer this trading psychology, what are our options? Well, option one is you can quit. I mean, I see people quit all the time. This industry is like a revolving door. People come, people go, people come and go, right? But the ones that stick around know the importance of the psychology and know the importance of creating a winning system. So option number two is option number one is you can quit trading. Option number two, you can continue to trade the way you do, and you're probably going to end up the same way. Look at your results now. Unless you do something different, the results are not going to be different. They're going to be the same. Or the third thing, which is the hardest thing, take a deep, hard look on why you do what you do, right? Take a more introspective approach and objectively look at your deficiencies. As I said, brutal honesty in trading, right? Honest with yourself, because again, it's your money. It's your account, or it's your client's money. It's your client's account, right? You need to know how to master that. So take an introspective look. Now, other thing is, now if we're talking about treating it like a business, are we really treating it like a business? Like if you have a job, let's say you run a retail store, right? Let's say you have, you run a 7-Eleven, let's just say that, right? Or any grocery store, whatever. You know exactly what you're going to buy the product for, what your cost is, and you're going to know exactly what you're going to sell it for in your store, right? But then why don't we know that with our stocks? Well, if we're buying a stock, what's a good price to buy it at? Am I overpaying for it? Am I underpaying for it? Or, okay, what am I going to sell it at? Because in the end, money's not made by holding something, despite what you might hear online. Money is made when you sell something. Otherwise, it's just a paper gain. So to know that, shouldn't we know what's our target on the stock? Where are we going to get out? And likewise, shouldn't we know when to get out if we're wrong? So a professional trader will always know when he's going to get out if he's wrong before he gets into the trade, not after. Most newer traders, they get into the trade first, and then they're like, oh, where do I get out? Right? No, you need to know that beforehand. Why? Because that's the number you're going to use to calculate your risk. Because actually, let me go back to a different point, right? So let's say you buy the stock and you're feeling a little bit jittery, a little emotional, a little fearful. I don't know, stock. I just got into the stock. I have 1,000 shares of this thing, right? Why do people take a loss that they never expected? Well, because they never planned for it, right? Why are you feeling emotional in your trades? Well, because you don't know what you're risking. You don't know what you're going to lose on it. Because if you already knew what you're going to lose on this trade if you're wrong, there would be no fear, because you already know that loss. You've already accepted it. You've already planned for it, right? So example, here's a great approach to use. Okay, and I want you to write this down. So let's say, think about it. What's a number that if you lost on one trade, you'd be okay with it? What is that number? Could be $10, could be $100, could be 1,000, could be 10,000. What's a number, right? So now let's say you pick, let's say you pick $1,000. You're okay losing $1,000 bucks. So if I buy a stock at $20, and based on the chart, it tells me if it gets below, let's say $19, I should be getting out and taking my loss, right? We know that. So now what are we risking? $1 per share. So now if I don't want to lose more than $1,000, guess what? I know exactly how many shares to buy. I'll buy 1,000 shares. So now if it goes to 19, I get out. Guess what I lose? $1,000. That's exactly what I planned for anyway. I already knew what I'm going to lose. So there's no uncertainty because I know what the worst case scenario is. And you do that with hard stop losses in the system, right? Because once you put the stop loss, the software will automatically take you out and you're going to lose exactly what you planned on losing anyway. So there's no fear. So now what that does is, let's say you're like, but $1,000, I don't feel comfortable losing that. Okay. How about $100? Yeah, $100 I'm comfortable losing. Okay, what about 150? Okay, yeah, I'm good with that. What about 200? Okay, I'm good at losing 200. What about 300? I don't know if I can do 300. It might hurt a little bit. Okay, great. Then 200 is the level, right? So if we found that level, and whatever that level is, it should never exceed 2% of your account. If you just follow these basic guidelines of never risking more than 2% on any given trade, right? And you already calculate the share size you need, so you already know what you're going to lose on it, half of the uncertainty in trading is gone. Now it's just about managing where the target's going to be, right? Now, in trading, you cannot control anything. Just hate to break it to you. You can't control what the stock is going to do. You cannot control what the market's going to do. You cannot even control what you're going to make on this trade. The only thing in trading we actually have control over is how much we can lose. Think about that for a second. That should be an aha light bulb moment for a lot of people. In trading, we cannot control anything. Not what we're going to make, not what the stock's going to do. But the one thing we have control over in trading genuinely is deciding when to get out and deciding how much we're going to lose on this trade. So by that measure, let's say we came up with the number of $200 is what I'm okay losing. Okay. So now what happens when the trade stops out? We lose $200. So we count that as minus 1R. R basically means risk unit. So we lost one risk unit. Now let's say on the winning trade, I made $400. What happens? I made 2R. So you see how my win rate is higher than my loss rate? By that ratio, if all my winners are just 2-1, right? All my winners are, let's say, $400. All my losers are $200. I only need to be right 40% of the time, and I'll still make money. Now, as a professional, you're probably going to be right more than that. You're going to be right 50, 60% of the time, maybe 70 on a good month, right? So that's how the ratios work in your favor. So until your fears are overcome, your potential as a trader will never be realized. Never, unless you overcome these fears. The problem and the solution lies within. With this thing right here between our ears, that's where the problem lies, and that's where also the solution lies. Okay. And you're only going to change when the pain to stay the same becomes greater than the pain to change. Most traders never change until the pain becomes so great. They made a bad mistake. They almost dwindled their account to zero. That's when they want to change. But oftentimes, by that time, it's often too late. So you have to change before it gets to a discomfortable level. Because if you don't have any chips left, guess what? You can't bet. You can't be in the market. So, and most people, they don't change until they're backed into a corner with a dagger hanging over their head. That's a very graphic way of saying it, but it's like in the ancient traditions they used to talk about it. Until the pain to stay the same is greater than the pain to change, you're not going to change. And that's what I noticed with a lot of traders. Okay. So think about it. We have the best business in the world, right? Very little overhead. We can set our own hours. All our assets are liquid at all times. We can get out anytime we want off the market. We're not tied to one place or location. I mean, I'm traveling all over the world and I'm trading. I can never be fired or laid off. I mean, think about how many people in 2020 had amazing jobs, but guess what? They still lost their jobs. They could still be fired. They could still be laid off. But trading, nothing changed. We're still at home doing the same thing over and over. So it's one of the best businesses, right? You can take off vacation whenever you want. You can work from home. And if you're good at it, the potential is basically limitless. Like a lot of my students now are running their own hedge funds. There's limitless potential. So sounds very good, right? So then why is it? All the such a good things about this business, then why is it that more people don't take this seriously? Why is it? Right? It's because of our inability to change. And trading, in a nutshell, is simply a systematic approach to making money in the stock market based on technical chart patterns that exploit two primary emotions of fear and greed. But these charts work off probability, what I talked about earlier, knowing your odds. Have you back tested your strategy to see how that strategy would have done over the last 15 years? The probable answer for most people is no. They never track anything, right? You have to track it because I know exactly what I'm going to win or lose every single month, right? Because it's statistical probability. And my only job as a trader is not to think what the stock is going to do or I believe in this company. None of that. My job is simply to keep executing on my strategy because I know at the end of the month what that strategy produces. I know in a long enough sample size what the strategy is going to make. Now, sure, the next trade I could take can be a loser, can it not? It could be a loser. The next 10 could be a loser. But I know after a series of 100 trades, a bigger sample size, this is my edge. And that's what a casino does. And that's what you need to do as well. But the odds will only work in your favor if you are consistent with that approach. You have to be consistent to it. If a strategy tells you out of 100 trades, you're going to win 40 or 50 and you're going to lose 40 or 50, is it possible that the losers can come back to back, like 10 in a row? It's possible, right? We can get 10 losers in a row too. But that's all part of the strategy. But if you don't know the strategy, how are you ever going to be emotionally calm if you don't know your numbers? And it's only going to work if you're consistent with the approach. And I see this all the time. People go from one strategy to another strategy. Let me try this person's newsletter. Let me go to that person's chat room. Let me go to this alert service. Let me do this. They never stick to one thing long enough to make it work, right? Any strategy can be good in 1 month, but can it work long term? Any strategy can be bad in 1 month, but is it going to work long term? So you have to have consistent trade types, consistent strategy, consistent patterns you're trading, consistent risk level on every trade. I risk the same dollar amount on every single trade. Why? Because then it's very simple for me. Lose 1R, make 2R. Lose 1R, make 2R. It's very consistent. I don't do random stuff like one trade I'm going to risk $100,000 on. The next one I'm going to risk $10,000 on. Why? Because let's say you keep risking $10,000 on every single trade and you win all of them, but then you risk $100,000 on one trade and you lose on them. Now you just ruined the whole strategy. But if you kept the risk level the same on every trade, you have a higher odds of making it in this business. Consistent risk management, consistent money management rules. And to be consistent, you have to have a massive amounts of discipline. Nobody's looking over your shoulder. You have to tell yourself, you have to police yourself in a real-time basis. And without this discipline, it's impossible to succeed in this business. I don't want to sell you a dream like a lot of people do. You can make this money in this business. You absolutely can. But it's going to come down to your ability to stick through and follow your trading plan. And this is why most traders fail. They know the right thing to do, but they're doing the right thing is a completely different thing, right? I showed you some of the charts earlier. Guess what? We can all be in the exact same trade at the exact same time, but all of our results are going to differ based on what? Based on where we got in, based on where we got out. We could all be in the same exact trades, but why is it some people make more money, some people less? It all comes down to your management and your ability to follow through on your trading plan. So no more excuses. The market is what the market is. The market does not care if you're an ex-CEO of a successful company and you're coming into the stock market, or market doesn't care if you're a janitor. The market treats everybody the same way. It doesn't care about us. It doesn't care about you either. Market is what it is. And that's the purpose you need to have, the mindset you need to have. Some trades work, some don't. It's all part of the game. But the odds are always in our favor if we follow the rules in a long enough time frame. But going back to one last point is that psychology is obviously, yes, we need psychology, but you also need a good strategy, because a great psychology can overpower a great strategy, right? If a strategy is proven not to work, statistically, it's not a viable strategy. You could be the mentally strongest person out there, but the strategy is not going to work because it's just not a good strategy. So you need the strategy, but then you need the psychology on top of it to follow that strategy. And that's what builds the success in trading. So actions speak louder than words. Don't tell me what you think. Show me what you do. A lot of traders talk a great game. They're so knowledgeable. I ask them any question about charts or the markets or the stock. They know every piece of information. And I'm like, then why aren't you doing it? You know everything. Then why is it that you're not getting the result? Why are you not doing it? You know everything. You know why? Because knowledge is not, knowledge is basically like applied knowledge is true knowledge, right? A lot of people say true knowledge is, power, but no, applied knowledge is power. If otherwise, it's just information. Otherwise, you're just learning, gathering a lot of information. But information only translates into your knowledge if you can actually apply it in real life market environment. That's what your success really comes down to. So, question from somebody here: how can traders recover from losses without letting emotions affect the future decisions? Number one is acceptance. You accept that you made a mistake, right? You didn't have a plan or whatever it was. First, you find out the reason why you lost the money. Is it bad risk management? Is it bad money management? Did you risk too much on the trade? Or maybe you just gambled, right? You just thought this crypto is going to go up, you just bought it. There's no plan. So first you have to dissect it, because in order to avoid those mistakes in the future, we first need to know what the mistakes were. So first you have to dissect what was the reason you lost that money, right? Bad risk management, bad money management. Because then when we know that, then we can fix it in the future so it doesn't happen again. And then I want you to train the eyes on the future, not on the past. You can't drive forward looking in the rear view mirror, can you? So you can't look at your past losses. You can only learn from it and keep moving forward. Focus on the next trade, one trade at a time. Focus on the next trade. Just do the best you can on the next trade. Good risk management, good money management. When that trade is over, then you focus on the next one. Then you focus on the next one. Slow and steady. Okay. Another question here. How do you define the moments? How do you define the moment or a mindset that starts to shift, change in understanding? So, as I said, for most traders, it comes down to when they take a bad loss, they realize the mistake, they get serious enough. So I was at a prop firm, when I started trading in 2011. So one thing that happened with me was we had targets to meet in the firm. If you had X amount of profit target, you get promoted and they give you more money to trade, right? And I was following my rules, but I was like maybe a few $1,000s short of my profit goal, but I wanted to get promoted, right? Even though there was no trade meeting the criteria that I had put in, even though there was nothing good out there in the stock market that day, I shouldn't have traded, but I forced the trade. So I can hit my profit goal. I'm just a few dollars away from it. And I took a bad trade and I took a big hit, right? And lost that money. And that's when I realized, I was like, these are all just numbers on the screen, right? These are all just numbers on the screen. There's no profit target. I just have to do the right thing over and over again and train myself to do that. Now, sure, I'm human too. Now and again, I'll fall prey to my own emotions and I'll make a mistake. But here's the difference between a professional and a novice. When a novice trader makes a bad mistake, guess what happens? He tries to get it back. Revenge trade. Let me take another trade. How could this trade do this to me? I'm going to trade again. And they keep trading, try to make it back. What a professional trader does is if he makes that mistake, he's like, yeah, I'm not going to do that again. Get back on the horse, singles and doubles, follow your process again. And over time, you're going to recoup that loss and you're going to consistently win. So there's no revenge trade. Do not try to do that. Okay. So that's a couple of things. So the key to success, psychological aspects account for 95% of trading success. If you're unable to manage yourself or your money or your account, you will not succeed. Never underestimate the power of objectivity. The main key to controlling this issue, as I said, is discipline. The ability to follow one's plan. That is it. In trading, discipline can be defined as the ability to follow one's plan. The key to obtaining discipline can be found in creating and using a trading plan that fits your personality style. That's what it comes down to. So, one quick exercise, I guess. I just want you guys to type it in the chat or name what are the characteristics of a professional trader. What are some of the characteristics? How is a professional trader being? So some people might say, well, a professional trader, okay, discipline, great, discipline's one. Then they might say he's calm. Okay, calm is one, right? Self-accountability is one. What else does a professional trader do? Well, he is, he keeps it simple. He follows a plan, all of those things, right? So we write down on the board, there's mindset, right? There's your calmness, your discipline, your self-accountability, self-discipline, whatever you want to write down. Now, notice, out of all the things that I just mentioned, is being calm, is that a skill or is that mindset? It's mindset, right? Or now, what about discipline? Is that a skill or is that a mindset thing? Well, it's a mindset thing. Self-accountability. Is that a skill or is that a mindset? Well, that's a mindset, right? The ability to be robotic or unemotional. Is that a skill or is that a mindset? That's a mindset. So you get the point, right? All the characteristics of successful trader are all mindsets. They're not skill, right? They're not skill. It's all mindset, and that's the purpose of trading psychology. So the key to obtaining discipline can be found in creating and using a trading plan that fits your personality style, okay? At its core, trading is simply a game of statistical probability. That is it. If nothing more and nothing less. The sooner you can believe this, the sooner you will make a profit. Winning is not about finding the perfect chart pattern. It's much more about consistency, especially as regards to trade and money management. All right, I'm going to take a couple questions here. But again, a couple things I want to leave you with. Just 5 points. Number 1, simplify your approach to trading. Number 2, create a trading plan. When you're going to buy, when you're going to sell, how much you're risking on the trade, what are you going to lose, what's your win-loss ratio, what's your win rate. then work on maximizing your strengths. A lot of people spend time trying to fix their weaknesses. Don't do that. Just double down on your strengths. Okay. And don't spend all day practicing what you're already good at. Spend most of your time getting better at your weaknesses and minimizing your weaknesses. Okay. So double down on your strengths. But if the money management is the weakest part, you got to work on that. Trading chart setups that are weak on, forget about it. Just double down on your winning setups. But in terms of psychology, you got to master those things. Number 5, no more excuses. I don't want to hear any excuses. Okay. So that's kind of what I want to leave you guys with. All right, is that hopefully that was helpful. I'm happy to take a couple questions, but just want to give you guys a free copy of my book. You can just scan this, or you can go to go.anmol.net. I'm just going to give you a free copy of my book, and then you can learn more about some of these concepts. All right. I know I'm a disciplined person. I can stick to any activity that demands a routine approach. So my question is why I cannot quit moving my stop loss when price comes against me. So again, discipline, right? The discipline to follow your trading plan. And why are you not disciplined? Maybe, again, goes back to what I was saying earlier. Your fear of loss is stronger than your hope for gain. Because if your hope for gain was stronger, guess what will happen? You're going to hold on to your target. But you keep raising your stop because you don't want to give it away, right? You don't want to give it away. Your fear of losing. So perhaps lower your risk level. Whatever you're risking, lower that. Because when the amount is low enough, we don't have any problem holding on. Everybody here on a demo account or a paper trading account, they're all millionaires, right? But when it comes to real money, that's when emotions come in. So maybe you're risking too much is one of the other things. Or the second thing is you never back tested your strategy, so you don't know what the odds are. I already know what my win-loss ratio is. So when I lose on the trade, I don't mind it because I know it's part of the system. So that's another thing. All right. So what is the main thing you look for in a good swing trade? Oh, that is a whole new question that's not related to psychology. But again, come into the chat room. We can talk more about that. But hopefully this was helpful to you. I wanted today to be a wake-up call for everybody. Okay. The goal is not to learn how to be a professional trader. Stop learning. You guys already know enough. Okay. You keep moving from one book to another book, one YouTube video to another YouTube video, one webinar to another webinar, one podcast to another podcast. What you need is not more information. You don't need more information. You don't need to learn how to be a professional trader. You just need to be one. Embody the characteristics of a professional trader. Step into that. All right. So hopefully that was helpful for you guys. Thank you. This is Anmol, livetraders.com, or my website, anmol.net. You can learn more about me over there and touch base with me on social media, and we can stay connected.
Thank you so much, Anmol. So this is a great insight. Stop learning. Yeah. So nowadays, a lot of people they are learning without any pauses, and it makes the trading awful. So it's better to stop trading and learn how to not try to be as successful trader as possible. Thank you so much for your presentation. Thank you so much for your insight. A lot of energy in it. So thank you for supporting us. And yeah, so guys, please download Anmol's book. I will do for sure. So I will read it. Thank you for your insights, and thank you for being with us.
Thank you.
Thank you. So guys, yeah, that's it for the first day. So we had a number of very experienced speakers today, and thank you to all the speakers we had today. Let me present tomorrow's program. I ask you to join our second day of the conference. We will have tomorrow really interesting speaker. They will be from real business. It will be the representative of the brokerage company. So it will be myself. So I will tell you a bit about technologies and how to use them in the field of trading psychology. There will be Edu Rojo with us. So he is Dr. Trades with a big community, with a big insight, and it is a man of the large soul. And there will be Greg Singleton also. So he is a great psychologist and coach. He's an author of the magazine called Brains. Very interesting speaker. And at the end of this day, of the second day of the conference, we will provide a demo of Tradefulness. We want to show you what we have already developed, and we want your opinion on that. So if you are interested, and I think you should, so please join. Please just have a look at what it is possible to use during your trading session, and how to help yourself in managing your mindset in trading. So that's it for now. Thank you for the first day of the conference. I wish seeing you tomorrow, and I wish you all really pleasant nights, evenings, whatever you have now. So see you tomorrow. Take care.
Tradefulness is the proud organizer of the first ever Trading Psychology Conference, bringing together the world's top trading psychology experts, 15 expert speakers sharing game-changing insights, 20 hours of transformative content, more than 3,000 participants. But we don't stop there. Tradefulness is more than an event, it's a game-changing AI-powered service designed for traders who want to level up their discipline and awareness to maximize their profits. We present Tradefulness AI, a holistic trading environment powered by AI where traders have access to all the tools they need. Discuss your trading insights and emotions directly with the AI using chat or voice commands. Integrate with trading platforms to gather market data and track your trading behavior. Analyze your trading performance with detailed statistics. Maintain a comprehensive AI-enhanced trading journal. Monitor your physical markers by integrating biometric data from wearables. Join the revolution in trading psychology. Whether you're at conference or using Tradefulness, one thing is clear: the traders who master their mindset will master the market.
Earn Online Broker. 13 years on the market, multiple industry awards. Earn is an EU-regulated broker compliant with the European regulatory framework. We provide access to major exchanges and a diverse range of CFD products with competitive trading conditions. Offering solutions for various trading approaches, we help you find the right tools for your needs. Traders of our clients may have subscribers. Earn up to 50% commissions from the trading activity of your followers. Trade across all the assets available and build your personal brand. Trade with us. Earn Online Broker.
Hello everyone.
Hello traders.
Hi.